Hello, everybody. Happy Sunday. I hope you're having a great Sunday, Super Bowl Sunday at that. Don't ask me what team I'm rooting for. I'm going for the food. I'm going for the food. Oh, Eddie and his he's all into it. New Orleans looks like a completely different area, by the way. If you go to the city right now and you go to Bourbon Street, that is not what Bourbon Street looks like. They have gotten rid of all the schmutz on the ground, all the what they call the Bourbon Street gravy. It's all gone. It's all clean. It looks almost Disney-fied. It's wild. But anyways, we're talking about what's going on in the housing market today. And there was a couple articles that came out and they kind of contradict each other. One of them said that there's more houses going into late payments. And then the other one says we're not seeing as many foreclosures. So I think it's important that we look at both of them so that way we can, decide for ourselves, kind of weed through the lines. The other thing I want to talk about is an article I found out about what's happening with landlords. And I want to get your opinion about it. They changed the rules on how long it takes for them to actually evict a tenant. And it was interesting to me, but I want to get your opinion on what you think, if this seems fair or not. But with that being said, let's say hello to everybody in the chat. Let me put on the old glasses because this lady can't see. All right, Charlton, nice to see you, sir. Turk Eclipse, hello. Sid Lucius, what Luscious? Whatever. Your wife put you in the doghouse. Lawnmower is here. King in the City is here. Noreen is here. Pete is here. Hello. Debbie Brady's here as well. YouTube Unfolded is here. Hello, everyone. Yes, indeed. Well, it's good to see everybody. I'm glad that you were able to make it here on a Sunday afternoon, especially with this being Super Bowl Sunday. I hope you guys have gotten some snacks. If you don't know, Eddie's in the background. And I did this on purpose so he wouldn't watch the pregame stuff. There was a method to my madness. He doesn't know that's why I did it. But I'm like, oh, I left my computer in my office. You're going to have to come out here. He's like, okay. Poor Eddie. Everybody's saying hi to you. John, we'll get into the questions. That was, you can go ahead and put your question in the chat right after we go over the first article. Eddie, if you could put it on the screen, it is the one about the foreclosures and where they're coming from. Do you know which one that is? I think it's a Housing Wire oh, we have a couple calls here today too as well. Homeowners, particular first-time homebuyers, are worryingly late on their mortgage payments. Rising mortgage delinquencies among homeowners can be the canary in the coal mine, experts say. All right, hello, D-Jack. Nice to see you, sir. All right, Eddie, can you scroll down for me, sir? I greatly appreciate it. A rising number of homeowners, particularly first-time homebuyers and military members and veterans, are missing monthly payments. One group says it could be the canary in the coal mine. In 2024, the share of serious delinquencies, which refers to mortgage loans that are over 90 days, are not active or not in active foreclosure, rose to the highest level seen in nearly 2 years, according to the monthly report of the Intercontinental Exchange. Delinquencies on the Federal Housing Administration loans typically used first-time buyers rose 74 basis points in 2024. A basis point is 1/100% of a point. Delinquencies on FHA loans were also 2.5% higher than they were pre-COVID in 20, when that was. Delinquencies on Veteran Affairs VA loans, typically used by home buyers who are military service veterans, rose 80 basis points in 2024. Overall, about 2.2 million mortgages were delinquent or in active foreclosure as of the end of 2024. FHA and VA delinquencies are likely to serve as a canary in the coal mine for mortgage performance in this cycle. To be sure, the national delinquency rate is still lower than it was before the pandemic. That is key right there. The national delinquency rose 14 basis points in 2024, but it was still 22 basis points below where it was prior to the pandemic. And I want to explain why I wanted to talk about this, because I was talking to somebody on the phone. They said, "Oh, I saw that there's more people in foreclosure now. We're going to see a wave of foreclosures hitting the market. That means that the housing market's going to crash and homes are going to get more affordable." And I said, "Send me the article." And so that's why I want to talk to you guys about this. We're still not at pre-pandemic levels. I'm not saying don't pay attention to this. Obviously, if more and more people are getting farther behind on their payments, we could see that down the road. I also want you to be very clear on the fact that if people stop paying their mortgage payments now, the foreclosure process in each state takes sometimes years. It depends on the state you're in. Some foreclosures can go a lot quicker in some states than they do in others. But by the time that it goes into foreclosure and goes through the court system and goes back on the market for the typical home buyer, first time home buyer, any kind of home buyer to purchase, it can take a very long time. So even though we saw a wave of foreclosures in 2008, that means that in 2007, a lot of people were starting to fall behind. So it can take some time before you even start to see these numbers. It's also important to note, just like this article said, we're still way below when we were prior to the pandemic, before all of the housing went crazy. We're still below those numbers. So let me take a little sippy tea. Homeowners with conventional mortgages are doing fine, but other industry data also reflects rising distress levels among certain homeowners. Over the span of a year, the serious delinquent rate among all types of loans rose 16 basis points as of the third quarter, according to Mortgage Bankers Association and the industry trade. Rates of serious delinquent FHA and VA loans, on the other hand, were rising much quicker. The serious delinquency rate of FHA loans rose 70 basis points. The rate of VA loans rose 57 basis points. In contrast, the serious delinquency rate for conventional loans only rose 2 basis points. The data also showed relatively strength among homeowners with conventional mortgages, or those who have bank-owned mortgages. The share of them that fell behind on their mortgages decreased in 2024 compared to the year before. So now it gets into the reason why they're missing their payments. Eddie, scroll down, please. There was a number of factors. One expert say that some of today's headwind included inflationary pressures, lower personal savings, natural disasters, increasing consumer debt, high tax and insurance payments, and a high debt to income ratios. All right, we can talk about this. Like we've talked about this on many live streams, but we all know everything costs more. It has cost more. So a lot of people, when they couldn't pay for their just everyday items, whether that be gas, food, insurance, all sorts of things. So what do they do when people get in that situation? They start depending on credit. And if you look at how much is on credit right now, for the average citizen, I mean, we are maxed. We are maxed, and people are running out of options at this point. As far as natural disasters, if anybody has ever gone through that, darn well, it's like money goes out the window for all sorts of stuff. And then of course we've talked about insurance payments at nauseum on how much they've gone up. So it's no wonder why a lot of people are in debt and starting to miss their payments. One possible reason for the uptick in FHA delinquencies is that borrowers who used FHA loans are typically financially weaker than those who applied with conventional loans. FHA loans are usually easier to qualify for than a conventional loan. For instance, they require a lower minimum credit score, and they ask for a down payment of 3.5% of the home sale price. Andy Walden, ICE head of mortgages And housing market research says less resourced borrowers have flocked to FHA and VA loans, partly because not many private lenders carry these borrowers. In recent years, without meaningful private label market at the lower end of the economic spectrum, borrowers in that category have turned to FHA and VA products. As an economic pressures increase, that's where they tend to see the market turn first. And that was true. Like if you looked back, if we look in the rearview mirror of what happened in '08, that was the same thing. Oh, hold on one second. Someone's playing there in the background. Oh, I know what it was. It was my cell phone. So yeah, we looked at the rearview mirror when you started seeing house loans starting to go bad. It really wasn't the FHA and VA loans. It was those like weird interest only loans, or those ARM loans that started going crazy. Then they're just bad loan products to borrowers that shouldn't have been borrowing that much in the first place. So it'll be interesting to see if this uptick will be different. So the states with the highest quarterly increase of delinquent rates were concentrated in the South. The 5 states were Florida, South Carolina, North Carolina, Georgia, and Louisiana. I think Louisiana was number 1 like a couple months ago. And, again, those are the areas that are hit with a lot of natural disasters. The impact of January's Southern California wildfires on homeowners' ability to repay their mortgage is not fully reflected in these reports. More than 6 in 10 mortgages affected by Los Angeles fires are held by private lenders and were they're so-called portfolio loans, according to ICE. Such loans are not sold onto the secondary market by Fannie Mae or Freddie Mac. 2 government-sponsored enterprises that oversee the bulk of residential mortgages in the U.S. But homeowners are not about to lose their homes to foreclosure. Even though that some homeowners miss their mortgage payments, foreclosures remain low for now. Foreclosures remain relatively muted due to the ability for the forbearance programs that let homeowners pause their payments until certain circumstances as well. Programs designed by the government to help prevent people from losing their homes, I said. And I'm going to tell you, if anybody took that forbearance, I'm going to tell you, if you go to sell your house, some of those loans or some of those restructures or those forbeared payments are due all at one time if you go to sell your house. So like, let's just say you took like 6 months of forbearance. When you go to sell your house, if you have not paid that back yet, the day of closing, all 6 months of those payments are taken out at once. Even though it was tacked to the end of your loan, you're selling your house early. And so they're going to take their money, just to let you know. A lot of them were set up that way. Homeowners are also benefiting from big gains in home equity. The share of homes with outstanding mortgages were considered equally rich in the fourth quarter of 2024 was about 48%, which is far above the 27% recorded in 2020, according to the separate report by Adam. The average homeowner had $319,000 in home equity, of which 207 can be borrowed against, while maintaining 20% equity cushion as of the third quarter of 2024. Do we have $319,000 in equity? No, we don't have that. Yeah, well, and here's another thing. They can draw on that equity if they have the perfect credit. You can't draw on that equity if you don't have good credit. Or, like a lot of people, and I remember this too during '08. People did have equity. They were not upside down on their house, but one of the family members ended up losing their job. So they wanted to have the ability to refinance their house because at that time mortgage rates started coming down because the market was softening, and they couldn't do it. If you lose your job, you can't borrow against the equity. So if you if you feel like that's a possibility and something that could happen and you want to draw on your equity, I'm not telling you to do this, but it's something you may want to look into, is getting a home equity line of credit and have that established ahead of time. So that way, when you are in trouble, you have that line of credit where you could just write yourself a check for some bills or whatever. I'm not telling you to do that. I'm 100% not telling you to do that. What I'm saying is look into your options, talk to a financial advisor. You just want to be able to access your own equity at any time that you need it. I like that. DJ says you got to hit that like button. Hey, at any time during this stream, if you would like your real estate question answered, please just put it in the chat. Just write the word question first, and then we'll put it up on the screen. Well, Eddie will. Eddie in the background. He's there. He's right there. Hello from Linny. Hello, David. Oh, also, we do have an automated system. This right here is an AI robot. It sounds like my voice. It's not my voice. She just took a sample of my voice. And you can leave a message and you can have your question played live on the air next Sunday. I will tell you that the AI robot is a little rude. Sometimes she'll try to talk over you. If you pause for just a half a second, she'll just try to talk to you. Don't let her talk over you. You just keep talking. You just keep talking. And then I'll take that message that you left with the AI robot. I'll cut it up and I'll put it up on the screen. We'll be showing those in just a bit. We have 2 of those questions today. DJ said, I'm a gouge, Kristina. I'm sorry, DJ. It's hard to know. I'm just thinking like Jack, like I don't know, but Jack could be short for Jackie. See, it's hard to know behind screen names. It is. Lady Ann says, hi there. Hi, friend. All right. So let's look at the other article that was about the foreclosures. So Alicia says, BlackRock, you'll be homeless and be happy. And easy burgers. Yeah. That's the whole thing. Like that was part of the question in the poll. If you guys haven't taken that yet, go ahead and do that. But if we see like a wave of foreclosures that like all of a sudden people started, getting into the foreclosure process, who's going to buy those homes? Well, we know who bought them last time. And he already said it. BlackRock and all those private equity firms bought those homes that went into foreclosure last time. It was unnoticeable because nobody wanted the houses at that time. But this time around, if those houses go into foreclosure, they're gonna scoop them up. Eddie, what's wrong? No, I thought I heard you say something. John Mackey says, question, do you see foreclosures in the seniors 55 plus communities on the rise, or just higher or lower prices? I personally have not seen any foreclosures in the senior 55 plus. If anything, those have never slowed down. Never, ever, ever slowed down. It's rare to see that you see homes hit the foreclosures in the 55 plus. Very rare.
You want to see the top 6 states with foreclosure?
Yeah, go ahead and put Eddie found the top 6 states with the most foreclosures. Yeah, we mentioned Florida.
You'd be surprised.
Yeah.
As of January.
I don't know if you guys can hear him in the background. I can hear him. Do you know there's a man in the room with you? Yes. He happens to be attached to me. So we got Delaware as we have Florida as number 4, South Carolina as Delaware. Yeah, I got it. Florida, New Jersey, Connecticut, Illinois. I know it's Illinois. Illinois is number 1. The land of Lincoln has the highest foreclosure rate in all 50 states as of March. Do you know who was the biggest during the pandemic, which blew my mind? New Jersey. And that market has been popping and hasn't stopped. New Jersey was the biggest during the pandemic. No, there was another article that I had about the foreclosures. Do you know
the Warren Buffett one? Got it.
He got it. Yeah. Philly for the win. Yeah, Eddie says that that's who he wants to. Isn't that right, Eddie?
Yes.
All right. Now, this was says foreclosures are down in 2024, similar to pre-pandemic level. Now, we just knew from the last article, it's not similar. Not similar. They're still below the pre-pandemic level. Hold on. Eddie's going to get this straightened out. Foreclosures in Mesa County trickled down last year compared to 2023 and similar level in 2019. Last year, before the federal moratorium on foreclosures from COVID-19. Mesa County recorded 206 foreclosures filing year. Treasury Public Trustee told Mesa County. You can see there's an all-time low in 2021. That was because of the federal moratorium and not a lot of action was taken. But, the whole point of this article is I just wanted to show the fact that even though the headline says one thing, you got to read a little deeper with all of these. Even most of the time, the most sensational headlines, the article, and I even do this with my videos. The headline will say one thing, and then they straightened out the facts in the article itself. So if people are just reading the headline, and you guys know it because you see it on Facebook all the time, you see it on social media all the time. People say, "Well, I heard blah blah blah," and you're like, "Let me see this. Where's your source?" And then they share the source, and you're like, "Okay, the article says though." I just want you to be careful is all. And then there was one more article I wanted to share with them too about the rent and what they're doing with landlords being able to evict people in a certain state. Yeah. So while you're looking that up, can you please explain what a pre-foreclosure is? Okay. Pre-foreclosure means that they've missed payments and they've sent out a appraiser to go out and do evaluation of the property. Is it still standing? Has it been burned by fire? All those things. They go through a pre-foreclosure process, meaning that they're examining the house. They're trying to get with the homeowners to get repayment done. That doesn't mean that they're in foreclosure. A lot of mortgage companies give you so many days of reprieve before they start that foreclosure process. They really want you to pay it because it's a pain in the butt for them to have to sell it. They don't like having properties that are hanging on their books. So they really try to work with the homeowners before they actually go through that foreclosure process. But they do start listing and posting the fact whenever a house isn't making their payments. And that's when you'll see them a lot on like Zillow, and they'll say pre-foreclosure. That does not mean it's actually going to go into foreclosure. Eddie and I years ago tried to buy a pre-foreclosure house, and we wrote them a letter, even saying, how much we would like to buy their house. We knew how much they owed on it, and we were willing to give them a good price on it. And they were like, "No, we're not in foreclosure. This was just a mistake. It was a clerical error." And 8 months later, we saw that sucker foreclosed. I'm like, man, we could have helped them out. That was a great house. Oh, wow. Deplorable. It says you can't draw on equity if your debt to income ratio is not where it should be either. Bingo. All right. Changes to Iowa law lower eviction notice policy from 30 days to 3, meaning that landlords now can evict a tenant in 3 days. So if you miss a payment, you only get 3 days notice, not 30 days. In 2020, the CARES Act was passed to assist those struggling with COVID-19 pandemic. Part of the legislation mandate landlords were required to extend eviction notices from 3 days to 30 days. In a recent ruling by the Iowa Supreme Court, the state now has rescinded its extension eviction notice back to 3 days. So it was already prior to the pandemic 3 days, but now it's at 30 days. They were now, like during the pandemic, it was 30 days. Now they went back to the 3 days. For organizations like the Salvation Armies, 3 days might not be enough time for the assistance programs. Who can call assistant programs? There's no assistant programs anymore. All right, let's scroll down. We have different funding from grants that pay for people's rent. The operations director of the Salvation Army said it depends on what guidelines each grant has to see who qualifies and what grants they can apply for. So it does take a bit. And the applicants have tons of paperwork they have to fill out, a lot of documents that they need to bring in, and it takes time, and it can't happen in 3 days. Well, it can't happen in 30 days. Oh, come on. I mean, let's just be realistic. I mean, I know that 30 days is a lot nicer. I mean, why don't they cut it in half instead of 30 days, and instead of 3 days, why don't they do at least 15 days? So that way it's not so much pressure on the landlord, and it's not so much pressure on the person being evicted. Those who are served an eviction notice prior to the change are not guaranteed those 30 days. Now, if it was longer than required 30 days notice, I would imagine that the landlord could serve the tenant the 3-day notice. It would be a new notice, and it would be 3 days, and it would shorten that period down. The Salvation Army can't help with rental assistance until someone has been served with notice. Our hands are kind of tied, is what she said. The positioning of the wording was really weird. The Salvation Army is working with the Iowa Legal Aid as a pilot program to offer landlords money to extend eviction notices with the hope of low-income families have more time to pay their rent. We will offer landlords $500 to continue its evictions for 2 weeks. See, 2 weeks? 2 weeks is better. 2 weeks is better than 3 days. Give us a little bit more time to run their application. The Salvation Army reported that 780 households called asking for rental assistance in January compared to 2024, when that number was 351. Wow. They're seeing a huge uptick. So now the 780 households are now asking for rental assistance, but it was like half of that, a year earlier? And that's what we're seeing. Are you guys seeing that too? First, I want to ask you this question. Do you think that 3 days is enough time do you think that's appropriate amount of time to evict somebody? Do you think they should only get 3 days and then they're evicted? You let me know. Question from Charlton says, is it true that in a conventional house loan, can't the lender make up a reason to call the loan? That's why I went with VA to protect me. I have never heard of that. I'm not saying that it's not true, but I've never heard of them saying, "Hey, now you owe me, like we're short. Go ahead and give us the $320,000 that you borrowed from us." I've never seen that, but I'm not saying that it's not true. Annie Stanikin says, if I cannot sell by hurricane season, I will begin looking into a HELOC. Yes. Yeah. And it's one of those things you get, and then you put it off to the side if you don't plan on using your equity, but at least you have that peace of mind that it's there. Every HELOC works a little bit differently, but it's nice to have that there for whatever you may need to use it for. It's your money. You may be, it's nice to be able to tap into the equity that you've gained in the house. If you have anything that comes up, like whether you're going to use it for investments, whether you're going to use it for buying more real estate, whether you happen to have an emergency, it's there and it's easy for you to get a hold of. So just letting you know. Illusion says, the question, do you think Florida prices will crash in 2025 or hold steady, particularly in the Gulf Coast? Inventory is huge. As far as the Florida market is concerned, they're seeing a lot of the same concerns that we are here in Louisiana. The homeowners have to face really crappy insurance. The options are very slim pickings, and there's no new insurance carriers coming through. The second thing is that, hurricanes come through. If you don't have insurance, you're going to have to pay out of pocket for that rebuild. Now, not only in just insurance, but your taxes have gone up as well. There's going to be some people that are forced to sell. Does that mean that there's going to be more inventory because of that? Could be, could be not. It's all up in the air at the moment. I'm not like huge on the real estate market. I don't have a full pulse of what's going on in Florida, but I know that a lot of people are leaving the state, especially if you're in those more affordable housing space, because they can't afford to make those payments anymore. Especially people in condos that you are on the beach and you've been paying, like, let's just say you're paying, $5,000 a year for your homeowners insurance, and now it's up to $27,000. Some people that are on fixed incomes can't do that. It's been happening with condos too, with association fees going up, HOA fees, reassessments. They got to come out with an additional $10,000 out of their own pocket in order to get the HOA out of the red because of the new mandates that had come out from the state. I mean, it's a mess, but I mean, is it going to make for home prices drop? We haven't seen it yet. Some areas have, and not many. Hey, Seer Guru. I haven't seen you in forever. Seer Guru is back in the house. Woohoo! Mark says, question. In Arizona, we have entered a buyer's market. Ooh, wow. As someone wanting to put a prefab house on my land, will the slowing of the market offset the impending tariffs, or is it all going to crash? Bum, bum, bum. Okay. I think that the tariffs as of now are on pause. They renegotiated the contract. If you look at the renegotiation, it looks exactly like the old one. And for now, I think it's been paused. We don't know what's really, we're all still waiting to find out what's going to happen with these tariffs. I don't predict the cost of building a house to get any less expensive. That's for sure. Just because of the uncertainty alone. If it was me, and you were really looking to get a prefab house, I would get that going right away. That's what I would do. I wouldn't wait for some kind of crash, because how long can you wait? Can you wait 5 years? I mean, we still don't have enough houses. There's still a bunch of pent up demand. There's still many people that want to buy a home right now. The cost of building a house is not going to get cheaper, no matter what stage we're at. If you decide to build a house, it's going to be more and more and more and more, because the building materials are going to cost more. You already got the land. Proud Liberal 24 says, what will happen to rents and sales in Washington, D.C. area? Return to office, but decrease government. That's interesting, because I know a lot of people, I've been seeing lots of videos of people talking about how they have to return to office. I mean, all it could do for the rents and the sales is go up, but the cost of real estate in Washington, D.C. has gone up so crazy since even before the pandemic. Once the pandemic went, I mean, like, you can't touch anything around DC under $1 million. I mean, you can, but you may not want to live there. I have a friend, you guys probably know her. She's on YouTube, Karen Gardner, and she talks about the Washington D.C. area. That's where she sells. And I mean, I think for one of my clients, she sold a $1 million condo, or maybe it was a townhome. And I was like, wow. She's like, it's very expensive around DC. So all that can do is make home prices go up even higher. G-Jack said should be more like 30 days notice to evict. That's what I would think. I mean, if the tenant isn't in the property, like say the tenant just skipped out in the middle of the night, yeah, like you could say the house is vacant, 3-day eviction notice, because you know that they're not there. There's nobody in the house. That's 3-day eviction notice. That makes sense to me. 30 days would be the most compassionate, but you got to look at it from the landlord's perspective too. They got to pay their mortgage. So I think in my brain, if you want to make it fair, make it 15 days. You have 15 days to find yourself somewhere else to live because you didn't pay your mortgage or you didn't pay your rent. And then, then that way it's not so hard on the landlord. And then they have enough time to find someplace else to go. And it also gives them some extra time to remedy the problem. Like they could say, well, I know you want to evict me and everything. I need a few more days to pay this. And instead of having to go through that process, instead of kicking them out after 3 days, what if that at the 7th day, they're like, here, I got all the money. I was behind. Everybody's struggling. A good portion of America is struggling right now. The cost of everything is so expensive. I think we could afford to give people a little bit of grace, just a little bit. Eric the Blue said at least 30 days should be allowed before sending an eviction letter. We've only used an eviction letter one time. Eddie and I did. We had a tenant that skipped out in the middle of the night. And this is the part that's so mad. We could not go in that house. We could not go in that house until after the eviction notice was served. It was gone. It was empty. She stole my washer and dryer too. I was so mad. Nally says, can you tell us how do we know how much equity we have? Oh, that's perfect. So your lender, whoever you're going to get this home equity line of credit with, will do something. Sometimes they'll do something called a drive-by appraisal. They do or over the desk appraisal. So basically they're looking at several websites. They're giving it a rough estimate of how much the house is worth. And then they're looking at how much you owe. And then they determine how much they're willing to give you as a home equity line of credit at that time. Whenever they see that scale, there's like a little recipe. It has to have X amount of dollars more. You have to you can't just take out every stitch of equity. You still need a cushion in there. And they'll let you know how much you can borrow or at least use for a equity line. Hello, Rick Smith. It's nice to see you. Hola. Alex says, hurricanes always devastate homes on the water, less severe in bit inland. You're right. So we're near New Orleans, but we're not on the coast, right? But we still get hurricane force winds. But by the time it gets to us, it's already gone down a category or 2. But that doesn't mean it isn't equally as devastating, because then you have tornadoes that come through. The hurricane can pause, dumping a ton of water that causes flooding. We've had that. You still get roof damage. You still get trees knocked down. You still have infrastructure that is you have to deal with. Then the creeks and the bayous start overflowing, and then you got that. Then it goes into the roads. I mean, it is a hassle, even though you're inland. I know some people that this insurance threw a lot of people near New Orleans for a loop, because it doubled in 1 year, and up towards New Orleans, it was even more than that, more than double. So insurance companies drive me crazy. And whenever I'll say this, because this is what sticks in my head. Insurance companies are risk assessment companies. Their whole job is to assess the risk and then make adjustments due to what they have figured out. So they're basically private investigators of what's supposed to happen in the future. They're supposed to be the best in the business. So that way everybody's happy and they'll have enough money to pay out claims when they come through. And they're supposed to be able to do this. Now, years have gone by with crappy risk assessment. All the CEOs have gotten all their money. They've gotten big bonuses every year. And all of a sudden, a big devastation of wildfires or flooding or hurricanes comes through. And they're like, oh, there was no way for us to predict that this was going to happen, even though it's been reported for the last 20 years on every national major network when it comes to environmental changes. We didn't know. So you guys are going to have to pay the bill. Our risk assessment company did a really crappy job, and now you're going to pay for it. But thank you so much for all those $25 million bonuses that I've gotten for the last 5 years for sitting here and making shareholders happy. Anyways, that was a little bit of a rant. I'm not a big fan of how homeowners insurance companies have been able to get away with it. I got in a big fight with I wouldn't say big fight, but it was just annoying me how people were like, oh, it's not the insurance company's fault. It's because of this particular thing. And I'm like, that is such a cop-out. That is not it. They know what they're doing. They know how they can personally make money for themselves. And they know how to foot the bill whenever they get themselves in trouble. And it's not because that bill that they screwed up on, because they didn't do a really good job with their risk assessment. That doesn't hurt anybody in their company. It only hurts us, the people that own the policies. Anyways, I'm not going to defend insurance companies. That's our damn sure. Pete says, how can you suggest us trying to get a hold of an owner that is in pre-foreclosure? I tried her house her ex-husband, and her neighbors. All right. So sometimes when people are pre-foreclosure, they may not actually be living there. So I would check with the tax assessor's website. You can also try to get a hold of them on social media and say, hey, look, I'm not trying to be not sympathetic to your situation. I see that you're in the foreclosure process, or you're in the pre-foreclosure process. I want to help you out before you could possibly ruin your credit. Is there some way that we could purchase your home? I know that you owe this much, and I'm willing to offer this, and we could do it, through a title attorney, so that way you can feel comfortable. All you can do is reach out, send letters, go through social media, go to the tax assessor's office and see if you have another address that's posted, because sometimes their tax address is different than the actual home address. So look that up. It's all there. It's all public record. I like big cups and I cannot lie. That was a great question, though. That was a very good question. I've seen it more often than not, though, that you see something that's online that says pre-foreclosure and it never hits foreclosure. It's less common now than it was like in 2008 when you saw pre-foreclosure. You knew that they were heading straight to the courthouse, but it's not as common today. Charlton says, question, I thought a landlord can inspect a rental property if they're notify the tenant within 24 hours. Yes, they can. In our situation, we didn't know that she left in the middle of the night. We legally could not step foot through the threshold of that house until after we gave notice, because she wasn't there. We couldn't give her notice. We couldn't give her paper letting her know that we were going into the house. She would not answer us. So we couldn't do anything until we have to go to the justice of the peace here. So we tacked that on the wall. Every day we came by and looked at it. She had turned off the electricity. The refrigerator had been left open. She broke that. And there was like food. Oh man, it smelled like a dead body in there. It was awful. Awful. Yeah. And then she like took ground beef and threw it all over our wood floors. I don't know what happened. I mean, Eddie talked to her. Eddie must have been mean to her. I never spoke to her. Nolly says, my question was skipped. I wrote the word question. Oh, Eddie, can you find her question? Oh, okay. Can you tell us how we do a home equity line? How much we have in home equity? Like I said earlier, I'm going to just say it again. You're going to have to go to the lender that you're planning on getting the home equity line. They'll do one of those over the counter or over the desk appraisals, and they'll let you know how much you can borrow. They'll let you know. They'll let you know. All right. Just me and Eddie now, I guess. We have a call. Eddie, if you can go ahead and put that on. Oh, you know what? I'll answer DJ's question first, madam. Question. When is that handsome guy from the Midwest coming back? By the way, I'm a gal. I know. I saw Jack. I saw the word Jack, and I thought, I just wasn't thinking. I'm sorry. I hope I didn't offend you. I'm really, it's funny. I know who you're talking about. She's asking about Kyle Seagraves. Kyle, it will be coming back soon. We need to talk to him about all the things that we know about loans, because he's the expert there. He runs the channel Win the House You Love. He wanted me to adopt a cat. He found a cat that he said, oh, all he needs is a good home. All she needs is a good home. And we're not getting another cat. Sorry. We have too many as it is. All right, Eddie, go ahead and put one of those calls up if you could, please. Eddie, can you put the call up? Are you?
Everybody that's trying to sell their house, like my neighbor next door, did a drop on. It's been on the market for like 5 months. And I'm looking to sell mine, but I'm going to look at a higher price to put on my house due to all these tariffs that's coming into play due to lumber, construction, labor, and everything else that's going to be included. Now, some people are saying that might be the wrong thing to do, but to be honest with you, Real estate always does the waves, the good times and the bad times. And those that are hurting need to sell. I feel for them. I pray they all make it somehow. But yet the carpetbaggers be out there trying to get a good deal or even try to even lower their price on a house. And it's a shame. And all. But I do looking at everything, regardless of what it takes to build a house, home prices will go up regardless. And those that hang in there like myself with like 4% interest, I could sit back and be patient. Yeah, and the other thing, all these people coming up here from California from the fires looking for places. And people from Florida been coming out here looking for places. And you know what? It's going to be what it's going to be regardless. Yeah, the area where I live at is more a retirement community, but just below 25,000. Yeah, they're telling me my house is valued anywhere from 409 to 419. But prior to what came down last year, they were selling for 425, 430. Instead of putting it at 429, for example, I'm looking to put it at 459, and I can sit back and be patient. Yes. Well, I want to say thank you.
All righty. Well, thank you for the call. Apparently he wants, okay, so this was, if you didn't catch, I know the audio was kind of messed up. He wants the houses are selling for right now about 419. He's thinking because of all the wildfires that have happened, that his area has gotten a lot more popular. He's thinking that more people are going to move to his area. So he's going to list his house for 459. If you were a home seller right now, would you think that is a smart strategy? You let me know your opinion, and I'm going to give you mine while you're putting in your answer. So I would tell you that the market dictates the price. If the properties have been coming down in price recently, you're hoping and trying to say to yourself, oh, my prediction of the future is because of the wildfires, more and more people are going to move to our area of Oregon. And you're just kind of putting faith into that. I think a price increase of $40,000 or $30,000 is quite a hike. And, you know, if you can just sit on there and just what we call that is you're trying to game the market. That's all you're doing. You're testing and gaming the market and seeing if something bites. If you have nothing to lose, then, you know, the worst that can happen is the market rejects it and it doesn't sell. But if you're looking to sell it in a expedient amount of time, listing it at 459 when the houses in the area are selling for 420, 419 around there, you're going to be sitting for a while. Other people said they would go with it. Agree with them. He's paying attention to a lot of things and the price of new. Good. Yeah. See, there's other people that agree with you. A true American businessman raised the price off of a disaster. Well, I mean, he's not causing the prices to go up. The market causes the prices to go up. So why would you? I mean, that's the market dictates the price. And if it's priced too high, the market will reject it and not buy it at that price. Proud Liberal 24 says, are foreclosures worth the buying anymore? In my area, they sell for close to market price, and they have been abused like a red-headed stepchild. Just a joke. I used to say that joke, and then I got an email one day, and somebody said, you know, you're really offending people that are stepchildren that happen to have red hair. And I'm like, oh, it's just a Southern expression. I didn't know that was offensive, but apparently it was something that could be an offensive. But anyways, yes, I still believe that foreclosures are worth it, but not all foreclosures are the same. You have to kind of, with a foreclosure, you have to put in how much is it actually worth for the neighborhood. So if the neighborhood is selling, the neighborhood is a $200,000 neighborhood, and then you have this foreclosure that's up for sale that's 175,000. You're like, whoo, on surface looks great, fantastic. Then you go over to that house, the yard looks like death. It hasn't had any repairs done to it. The roof needs to be replaced. And that alone is going to cost you another $20,000 on the cheap end. Then you go inside and it, you know, like all the floors need replaced and all these other things. And you add everything up everything's said and done, and you own this thing. It's going to cost you an additional $50,000, $60,000. Yeah, then that's not going to work out for you. That's a dumb thing to do. But there's still foreclosures out there that are available that you can get a deal on. I find that auctions right now seem to be better than, the typical foreclosure process, depending on the state. You want to go check out those local tax auctions. They work out really well. We have another call that came in this week too. This was a really good one. This is about pricing of homes in a luxury area. Pricing of homes in a luxury area. There's lots of people that agree with the man from Oregon. Pedro, I believe his name was.
My name is Ariel, and I'm calling from Olathe, Kansas. Hey, Kristina. So I was just wondering, I live in Olathe, Kansas, and in this city, there is a predominantly wealthy suburb, and those houses list for around $1 million or so. And my family and I are interested in purchasing one of those. But since with everything going on, do you think that those houses might drop in price? Since, I mean, even before all this, they would stay on the market for a pretty long time, around 1 or 2 months. So do you think that buyers will get kind of desperate to sell their houses so they'll list them kind of cheaper? Because I've definitely seen that with, just the average regular priced houses. They usually sell pretty quick around here, but since, I don't know, people want to get them out of the way with the houses, so they'll list them pretty cheap and then they'll be gone. And I was just wondering if you think that'll be the same for more expensive houses and around like the $1 million or so range, and if it'd be reasonable to think that some houses would be listed for around 900.
Okay, so here it is. This is what I would tell you. Luxury homes tend to stay on the market longer because the pool of buyers that can buy at $1 million is much smaller. They always tend to stay on the market a little bit longer than a traditional home. Let's just say the market on a house for like $300,000 to $400,000, stays on the market for an average of 30 to 60 days. When you're dealing with luxury homes, they have a longer period of time on the market, which would be average. Doesn't mean that prices are going to come down. It's just normal for that type of home. Again, you're playing the market. That's what you're doing. You're trying to figure out what's the best price and when you're going to get it. If interest rates are something that you're sensitive to, then you may not want to wait for interest rates are predicted to either remain flat or go up a little bit. So you may want to think that through before you go and look at some of these houses. The next thing I'm going to tell you is always take a chance, take a shot. If you see that a house has been sitting on the market for more than 6 months and they have not adjusted their price, throw them an offer, even if it's a ridiculous offer. Throw them the offer that you're comfortable with, because the worst they can say to you is no. I learned very early in my career when somebody would sit there and they would offer some ridiculous amount of money, or they were being absolutely a pain in my rear end of all the things that they wanted. I did whatever they told me to do. And I was shocked on how many people were willing to bend to get their house sold. So take the chance. If you're wanting to buy now and those houses still haven't come down in price, and you see some that really have been sitting on the market for a while, throw them the number that you are comfortable with, because you might be surprised. They just might take it. Yeah, somebody says those sellers won't budge. You'd be surprised, though. You never know. The psychology, that's what's going on in their brain. You just never know. You got any more questions, Eddie, that came up on the screen? If you guys have any questions, I have no problem. Go ahead and put them up on the screen. Oh, we also have some I want to know what the poll question is. Debbie Brady, if you don't mind, while Eddie's pulling that up, can you tell us what the poll results are? I'd really appreciate it. Ted K says, is it correct you get the home line of credit, but you aren't charged until you use it? Yes, that's correct. Yeah, we have one. We've never used it. We got charged fees at the beginning to originate that loan, in order to have that open line of credit, we had to pay. At that time, they didn't do drive-by appraisals. They actually had to come to the house. So we had the appraiser come to the house. What else did we have to do? We had to pay some other fees, but we paid those all up front. Yeah, we paid the origination fees, we paid the appraisal fees, but that was pretty much it. It wasn't that expensive. It wasn't expensive at all. I was like, why doesn't everybody do this? This isn't that bad. I was expecting like that loan process to be very similar to buying a house, but it was not. Yeah. Fitness Health says, Kristina, you're the most honest and genuine without pushing a narrative regarding the industry. Love you and Eddie. Great team. Eddie, look, that's him behind me.
I do nothing.
Thank you so much.
Thank you.
Thank you. I appreciate it. I try to be. Sometimes you might not like my honesty though, but at least there's no gray area. Oh, look, Debbie Brady's got the poll results. Here we go. Debbie Brady says, this is with the poll question. Will more foreclosures make home prices drop? 32% said yes. 39% said no. And another 30% said they didn't know. I am very happy with our audience today. I don't think that an uptick in foreclosures right now will make home prices drop. And I certainly don't see the prediction that you'll probably hear from some of these, what I call them the crash bros, saying, oh, look at all these foreclosures. There's so many people now foreclosing, blah, 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 blah. You know how they do, right? It makes for a great video, lots of views, but it's not the truth. And what happened in 2008 is not happening today. We do not have the supply of houses on the market, and we don't have the supply of houses that have been built since 2008. Before that crash, we had an excess amount of supply of homes on the market. There was so many houses being built all over the country, and builders lost their rear ends. And so from that moment forward, we never have been building at that pace since then. Those builders are like, I am not going to be caught like that again. I'm not going to do it again. And then we've suffered the consequences since then, because as people have gotten older, growing up, they grow up and they're like, oh, I would like to buy a house, but there isn't as many houses available. So that, of course, that makes the prices of homes go up because we haven't been building as much. That is a repercussion of what has happened. So is he locked in there? He should have been. Yeah. Alex says, did you say you want to buy my Miami condo? I know. I would rather have my a root canal done with no Novocaine than buy a condo in Miami. I don't like that. Mark says, FYI, your videos on manufactured homes led us to choose one over a stick built $400 per square foot versus $178 per square foot. Thanks for the great videos. Mark, I'm glad to hear that. And look how much money that you saved by doing it that way. A lot of people, I'm actually filming a video right now, and people need to look at all housing options, the most affordable ones, as a stepping stone. It's your way to get into the real estate market. And there's nothing wrong with manufactured housing. They have a scarlet letter on them, and people have preconceived ideas of what a mobile manufactured home is and what it's not. And, those notions are hard. You know how it is. It's hard to change people's minds. But if you're open to it, there is value in that. There is a lot of value. And look how much money you're saving. I mean, look how much money you're saving by doing it that way. Thank you so much for the comment. Targeted Plants Guy says unemployment will need to hit 13% for home values to go down significantly. I wish I had a bullhorn where I would go ding, 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 ding. How about I do a little happy dance? Yeah, you are 1,000% correct. And I have said this 1 gazillion billion times. In order for home prices to drop significantly, we will have to see the job markets hit a bad point, like terrible, terrible, terrible. And then it takes time, because those people that have lost their jobs, that are paying mortgages, again, like we said at the beginning, it takes time because they have that period of pre-foreclosure. Then they go through the foreclosure process, and that can take months up to years to get done. God forbid they're going through bankruptcy at the same time. We had one, I tell you guys this, but we had one that was for sale over here. They went into the pre-foreclosure, foreclosure. They were going through bankruptcy, and they were getting divorced at the same time. That house never went back on the market for 10 freaking years, vacant for 10 years until it was all cleared out. And then it went on up for sale as a foreclosure. That's how much time it took. So don't expect like a big wave of foreclosures to hit the market like it did in 2008, where you can see home prices coming down quite a bit. But if we have a significant loss of jobs and people can't pay those mortgages, we will see the ripple effects of that happening. Moses says, so you're saying there's a chance? Oh, I guess there's always a chance, you know? There's always a chance. Overjoyed says manufactured homes are fine up north, but I wouldn't in a hurricane state. You know, they've come up with some good strapping systems now in comparison to years previous. Some of them, I mean, I don't know when the actual strapping system itself came into play. I'm going to have to look that up. But, you know, a lot of them didn't have any strapping systems. So yeah, you were facing yourself into some elements that didn't need to be happening. But they've improved on a lot of those things since then, a lot of them. Why would the market crash? Well, I'm saying that because there was from 2020, 2021, I mean, for the last 4 years, there is a group of content creators that have been shouting from the rooftops, the market's going to crash. Oh, the market's crashing. Oh, look at this market. This is the sign that the market's going to crash. We're going to see home prices drop 40 to 50%. I'm not saying that. That's what they were saying because it got a lot of views. It got a lot of clicks. But there's no catalyst for any of that predictions to actually happen. They got their names in a lot of blog articles. I wasn't going to say something that wasn't true. And I've always maintained there isn't going to be a crash unless some other financial disaster happened. We don't have the catalyst like we had in 2008, which was really crappy loans and various other things. But what made housing go crazy was people that shouldn't have never bought a home or given the opportunity to buy a home, and they didn't have the credit. They did this stated income loans. So anybody could walk off the street and walk up to a lender and say, hey, I make $500,000 a year. And they're like, hey, do you got a phone bill? And they're like, yeah. And they just fill out a form and they were given a house. And who knew that house of cards would come crumbling in? We don't have anything in the market like that now. I'm not saying that there isn't such thing as stated income loans, but the restrictions you have to go through now to get a loan on those terms is absolutely ridiculous. There's still ARM loans out there. People do them all the time. Again, to get into those loans, the restrictions are a lot higher than they were in 2008. So it's not going to look the same. If prices, I'm just saying, if prices start coming down, there's going to be some other economic disaster that made those homes come down. It's not because of some kooky loan. Eric the Blue says, I found a SIP home design build company by accident going on Home and Garden Show in Denver. I might use for my next home. The company is HQ, not far from Denver. Company HQ. I'll have to look that up. Eddie, do you happen to have the web? Oh, I thought the company name was HQ. All right. So Eric the Blue, I'd love to know what the headquarter office name is. What is the name of the company? And we can put it up on the screen. Oh my gosh. You know what I forgot to tell you guys? There is a company that has saved my rear end, and it saved my husband's rear end. We had somebody else doing our taxes for eons, and so let's just say we didn't part. I don't even know how we parted. We just went and grabbed our stuff and we walked away because things they were going awry during the pandemic. It was hard to find somebody else. And now we were very fortunate to find another company to work with us for our taxes. Eddie, do you happen to have their website, or do you want me to pull that up? Huh? It's Attract, and they spell it with 2 C's. Yeah. Just look at. So I have to tell you, they found a tax they saved money from how much we would have had to have paid. This is the reason I'm telling you guys. we would have had to pay out the nose on some of our taxes. We had to amend a bunch of them because those deductions weren't even taken out. And so I can't even be more thankful. And I'm giving them a shout out because I want you guys to save money too. And then I called him and he said they can do taxes anywhere. He didn't ask me to do this. I'm just doing this because I want you guys to save money too. If you're thinking about getting your taxes done this year, go over to Attract. Tell them I sent you. I don't even have an affiliate link. I have no affiliation other than they did my taxes and they saved me a crap load of money. And they can do yours as well. So I just wanted to give them a shout out. Trey over there has been fantastic. The whole staff has been really nice. We're terrible to get a hold of and we're like really bad with paperwork and they keep us on track. So I wanted to put a little shout out to them. Trey over there at Attract. If you guys want to get your taxes done and get them done right and saved a bunch of money, go over to them. So there he is. That's our guy. That guy you saw right there, stand there. That's our guy. Everybody's glad to see you in the background. Elizabeth says, what is the best month to list my home? Well, that is area specific because not all areas, like for instance, in Florida, you have a little bit more time than you would, let's just say in North Dakota. So like North Dakota, the best time would be during the summertime. The wintertime would be the absolute worst. But in Florida, you can pretty much sell year round. Typically, if you're going to look at it on average, you would want to put your house on the market at the beginning of May, and then you would like pull it all the way through if you can't sell it all the way to October. That's your best window from May to October. Because you know what happens after October. Once Halloween happens, most people have either pulled their house from the market or decide, not many people are leaving it because of the holidays. But it starts here in Louisiana. The home buying season starts right after Mardi Gras. It's like Deadsville. The minute Mardi Gras is over, all of a sudden your phone starts ringing again. That's how it is in Louisiana. It's best to contact a real estate agent in your area to find out when the peak time is. But typically, on average, it starts in May and ends in October. Lexical Gap says, question, does land value follow the real estate market when it does rise and fall, or is it more steady? Land does not increase in value at the same rate as land that actually has a structure and improvements on it. It's not the same. And it does tend to stay steady, meaning that you're not going to lose your rear end on it like you would with a piece of real estate, but you're not going to gain a bunch of equity on it either if you haven't done anything to it. It is a little bit more stable of a, what am I looking for? Investment, stable of investment. Why can't I come up with that word? Man, maybe I need to start drinking some of that fermented grape juice that Eddie's got there on the counter. Somebody said, go Eagles, Eddie, just like your team. Yep. G-Jack says, question, are they in New York, the Attract company? No, they're right here in Baton Rouge. They can do it anywhere around the country. They can do taxes anywhere in the country. So everybody, I hope you have a fantastic Super Bowl Sunday. If you need to get a hold of me, all you have to do is go to my website, KristinaSmallhorn.com, hit on one of the pink buttons, fill out the form, and I will give you contact back. Yay. Yep. You just hit that. If you want to listen to this as a podcast, you can go to anywhere you listen to podcasts. It says, just look in the search bar, Kristina Smallhorn, Real Estate for Everyone. And then you can share this week's podcast, this week's live stream with your friends and family. And it will be posted tomorrow morning. Eddie always gets that in.
If you like it, leave a comment.
Eddie wants you to know that if you like it, make sure you give it a 5-star review and leave a comment. If you don't like it, give it a 1-star review and tell us why it's the pits. We don't know. We can't get better unless you tell us why. That's for sure. All right. So on that note, I want to say happy Thanksgiving. Man, my brain is like, what? I really need to start drinking. And I don't even drink. I hope everybody has a fantastic Super Bowl Sunday. I hope you eat lots of food. Enjoy the game. Don't get too rowdy out there. And we'll see you next Sunday. So long, everybody. Thank you so much to the moderators and participating in the chat today. I'm like tongue-tied. I don't know what's wrong with me. All right, everybody. Bye. Cheers.
Kristina. Kristina signing off. This dream's about to close. Tiny homes, big dreams, the wisdom she bestows. Real estate queen, always keeping us in toes. Hustle on 1,000, every vibe she shows.